Good morning, everybody. Hey, welcome to Wednesday, the 3rd of February. I hope that your week is going well as we get prepared to talk about what's happening in the markets. Hey, what's happening with GameStop, right? That's a big deal. We'll continue our conversation about that, the big winners and losers there. And we'll talk about a few earnings that have come in. And economically, macro, not sure what's out there today. But that'll be Dave's department, and he likes to keep up with that stuff. So, hey, again, folks, I just want to remind you, I know it's like beating a dead horse, but, it is important to me that folks realize that the only thing that anybody can control in their portfolio is the amount of risk that they have. And what I see in my practice is that people don't know how much risk they have in their portfolio. They don't even know how much risk that they're comfortable with. And so we want to make sure we get that under control before it's too late. That's why we developed the financial x-ray to walk through that process. Give us a call at 863-382-0037 to schedule your financial x-ray, or you can go to my website, statlerfinancial.com, and there's a link to my calendar there, as well as to a lot of these radio shows. So, hey, looking forward to our conversation with Dave coming up next.
Nate, as there, we're at 8:41 here. It's 19 before 9. It's time to check in and find out what Sam Hill, the Reddit boys, are doing to your IRA today. Well, if you're into GameStop, that actually is what's going on. But the rest of it, well, we got a pretty good list of things going on Wall Street that actually do affect the real world. Let's head down and check in with Statler Financial Services' very own Phillip Statler, who's on the line. Phillip, good morning. How are you?
Good morning, Dave. Hey, doing well today. It's colder this morning than what it was yesterday morning, but it feels warmer to me because the wind's not blowing that 20 mile an hour.
That might have been a piece of it, but I got to tell you, my stray cats were profoundly unimpressed this morning, and I got some use out of my leather jacket that I really don't wear all that terribly often, but I'll tell you, it felt kind of good this morning out there at 38 degrees in my driveway.
Yeah, I had to put a little heavier coat on today, especially when I was walking from my office to my Kiwanis meeting. It definitely needed a little heavier jacket today.
It definitely wakes you up. Financial news of great import. I was kind of giggling about this when we first got on the phone before going on the air. It does not happen very often that the change of a CEO in an American corporation bumps all the White House, all the congressional, all the international news off the evening network newscasts. But that's what happened yesterday when Jeff Bezos announced that in 9 months, and I repeat, 9 months, he's actually going to step down as the CEO for Amazon. But you'd think the world was coming to an end the way they treated it on NBC, CBS, and ABC last night.
Well, it probably is a big news item, Dave, when you think about it. I mean, he started that company. And it's not like he's walking out of it either, though. He's still going to be the executive chairman. Believe me, he's still going to have a finger in what's going on there. And no changes really expected for a while anyway, until this new CEO gets in and figures out what's going on for sure. So you're right that it is a big deal, though, because of just what's happened at Amazon, right? I mean, they exceeded $100 billion in revenue for the first time this last quarter. I mean, there's some big things that have happened at Amazon, as well as their earnings report coming out. They made almost double what was expected at $14 a share. So, a big deal for them.
Oh, yeah, they absolutely kicked butt in their last quarter. One of the major brokerage houses has now re-rated them up so the target stock price is up to $5,000 a share. That starts getting up toward Warren Buffett numbers, doesn't it?
Yeah, I mean, it's at $3,445 right now pre-market, which is up about 1.8%. But and the high has been for the last year, the 52-week high is $3,552. So we're talking about a $1,500 increase. I wonder what timeline they put on that price target.
I don't know, but it struck me as being earth-shakingly large one way or the other. And your point's well taken. I was kind of making fun of the notion that the networks went so gaga over it. Bezos really he's a fascinating success story. He started out just selling books on the internet back when he had hair. And all of a sudden now, it's the mover and shaker that's even managed to make Walmart change their business model in order to compensate for all the online and pickup sales. I mean, this guy really did manage to change the world by a company that it was only about 5-6 years ago we were giggling about. Holy crud, they finally made some money.
Yeah, exactly. Because there's a long time they didn't make a dime to their bottom line. So yeah, they are definitely become the 800-pound gorilla in the room.
Without a doubt. The other bit of national quality news that came out this morning is our usual first Wednesday of the month number here, ADP private sector employment. And in addition to all the fun we're having talking about Amazon, we got some real good news to start out. After a big disappointment last month, they revised that number up by a bit, and they said that ADP said that we'd gained 174,000 private sector jobs last month. My tracker had them only expecting about 49. That's the blowout of the year.
Yeah, it is. That is a pretty big increase over what was expected. And it was a good thing they revised, last month up a little bit. The biggest gains came from healthcare and social assistance and professionals and business services were the big gainers, as well as, leisure and hospitality. They added 35,000 new jobs, but that's still way below the pre-pandemic levels. And I know, healthcare is still a big deal. I mean, yeah, I know that there's still a short supply of nurses that are needed, even here locally. That's a big hole that needs to be filled.
I know one of our hospitals been bringing back retired nurses in order to fill out the staff. I'd imagine the other one probably is contemplating it if they have it as well. It's definitely a short supply line of work. The item on the ADP that surprised me was the big growth, even if it's not back up to pre-pandemic, in the hospitality industry, because in January we were still yammering about the shutdowns in New York and California. So it's good to see some recovery growth in that sector.
Yeah, it is. And I think that we're seeing, even though California kind of shut down, I think we're seeing a little bit of relief in California now, just because of some court cases that flew through the system there, that kind of limited California's ability to close everything down like they wanted to.
Absolutely. The growth last month, though, while they were still going through the shutdown, kind of surprised me. It is earnings season. There is a whole boatload of stuff going on. Among others, another one of the 500-pound gorillas on the block, the Google folks, also had a report to put out, didn't they?
They did. Yes, Alphabet did report. They came in at $22.30 a share, and they were expected to come in about $15.90 a share. So a pretty substantial beat for them as well. Revenue was well above expectations. They had strong results in their ad sales. They did have a loser though in their kind of their sales department, and that is their cloud division didn't do as well. Actually saw losses in their cloud division. Now I will give you this. This is the first time that they've actually split those things out. But it was down. They gave us a month over or quarter over quarter number, and it was down from what it was the previous quarter. But they are they're the big winners this morning anyway, Dave. I mean they should be anyway. 7.5% up this morning.
Wow, and I know their target stock price was also raised by the same brokerage firm. They're expected to get up to $3,000 a share now.
Yeah, and actually at this point, right now they're trading at $2,062, which would be a new 52-week high. So they're getting bumped right up there.
Yeah, the cloud coverage shortage kind of surprised me because that's been the growth business for so many of the high tech firms, and Google evidently hasn't 100% figured that out yet. That's kind of a surprise, isn't it to you?
Well, I will just say this, Dave, they were kind of first to market in that area, which gave them a big advantage. But through COVID, I will tell you that Microsoft Teams has been really diligent in advertising and pushing stuff out to businesses. So I wonder if we didn't see a switch, people that were already using Microsoft Office, Microsoft 365, if they didn't think it was easier to make that change instead of using Google Drive to use, the Microsoft version of that. And so I think that may be what you're seeing there a little bit.
And you also bring up the point that they were first to market, so they're kind of almost a more mature business than some of the other cloud server companies.
Right. So people have had a longer time to say, well, I don't like this feature, I don't like that feature, and somebody's come along to improve that feature, and so people will make that move.
Valid.
Yeah.
Evidently, the investors weren't all that concerned about it, so I guess I shouldn't be either. But it just kind of struck me as odd because everybody else is growing like a weed, and Google actually shows an off-performance number in that sector.
In that sector, which is probably why the other people are seeing an increase in that sector. But hey, ad revenue's there. They've got search down. Let's face it, nobody's taking that away from them.
Absolutely.
So on other earnings, Dave, we have Spotify. They're the music streaming service. Yesterday we talked about Sirius Radio. They had a bigger loss than expected. Revenue though did beat what was expected. And one of their key indicators is subscribers, right? Just like Sirius Radio. And so they had a jump of 24% in their premium subscribers, which was way better than expected. They're up to 155 million premium users. So some good numbers there, but they missed on earnings. So they're getting punished this morning, down 7.25%.
Wowzers. Got time for a couple more earnings. Household names you see.
Well, this is, you won't recognize the name, but you'll know what it is. Capri Holdings, which is the holding company for Michael Kors and some other luxury lines out there. They beat by 64 cents a share. Revenue, though, missed, in part because of European closures. They've got a pretty big following over there. But they're getting a nice bounce this morning. They're up 6.8% before we get going. Let's see. What do you think? Let's look. We'll look at a big surprise and a big miss. Scott's Miracle-Gro. They were expected to lose 77 cents a share, and instead they made 39 cents a share.
Wow.
Well over $1 miss there. I mean, they beat by over $1. Revenue was ahead of expectations. Their sales were up 147%. So they're trading up about 4% this morning, right up against their 52-week high. And let's talk about a miss. They were one of the things we talked about for a while, and that's Chipotle.
I see them on my loser list. How bad was it?
Well, they fell 25 cents short of their estimate. They were supposed to make about $3.48 a share. So there was a miss there. Revenue was in line with what they expected. So that was a big miss for them. They're down a little over about 2.2% this morning.
Well, poop, we had to have some bad news in amongst all the good news. Summarizing the whole mess from yesterday, it was an up day on Wall Street. It was got a little bit of recovery action going on yesterday. 45 minutes before we open this morning. Phillip, what are we looking at?
Hey, we got some, it's been bouncing. The Dow's been bouncing red to green, green to red. It's slightly green right now at $4. S&P 500 is up 0.4%, like almost $15, and the Nasdaq's up 0.7, or about a little over $93. So everything's at least green right now in that area. On the commodities front, we were talking about silver earlier. They're up 2.8% to $27.15 an ounce. Gold is up 1/3%, and then crude oil, Dave, it's over 55. Up 1.1% to $55.35 a barrel.
Gosh, we're going to have to open up another pipeline or something, huh?
Well, they're closing them. They're closing them. We got to figure out a way to open them.
That's my question and the implication. Overseas markets, mixed bag on the Asian rim. For the most part, we had some upseas, some downseas. No big numbers either side of the zero mark. Europe generally modestly up halfway through their day. Phillip, it's time to start thinking about tax season, and it's also time to think about your IRA and other investments. You can guide me to make sure that my retirement is safe. How do I get to you to get that guidance?
David, give us a call at 863-382-0037 and go to my website, statlerfinancial.com, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
And back here again tomorrow morning about the same time on Light FM. Phillip, thank you so much. We'll see you then, all right?
All right, buddy. You have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us. Remember, risk is the one thing that you can control. Make sure that you don't have too much risk in your portfolio. Give us a call at 863-382-0037, and let's walk through our financial x-ray. Have a great day. I look forward to seeing you again tomorrow. Take care, guys.